Liquid mutual funds are a type of mutual fund that invests in short-term, low-risk securities such as treasury bills, certificates of deposit, and commercial paper. These funds are known for their high liquidity, meaning investors can easily buy or sell their shares without facing any penalties or restrictions. One of the main advantages of liquid mutual funds is their ability to provide a safe and secure investment option for investors looking to park their money for a short period of time. Unlike other types of mutual funds, liquid funds are not subject to market risk, making them a popular choice for those who want to preserve their capital while earning a modest return. Another advantage of liquid mutual funds is their competitive returns compared to traditional savings accounts or fixed deposits. Since these funds invest in short-term securities, they typically offer higher interest rates than regular savings accounts, making them a more attractive option for investors looking to earn a decent return on their investment. Additionally, liquid mutual funds provide investors with a high level of flexibility, allowing them to withdraw their money at any time without incurring any penalties or fees. This makes them an ideal choice for those who may need access to their funds quickly in case of an emergency or other unexpected expenses. Overall, liquid mutual funds are a popular choice for investors seeking a safe and convenient way to earn returns on their investment while maintaining high liquidity and flexibility. Liquid mutual funds, open to investors of all ages, offer a safe haven for your money. This translates to minimal market risk, making them a good option for those who prioritize capital preservation over high returns. Think of liquid funds as a high-interest piggy bank. While liquid funds boast safety and ease of access, it's important to remember that no investment is entirely risk-free. Interest rate fluctuations can slightly impact returns, and unlike fixed deposits, there's no guaranteed interest rate. Disclaimer: consulting a registered financial advisor is recommended before making any investment decisions.